An organization's ability to achieve sustainable competitive advantage depends not only on understanding its external environment but also on effectively leveraging its internal resources and capabilities. Internal analysis enables management to identify the assets, competencies, and organizational processes that distinguish the organization from competitors and support long-term value creation. However, internal strengths have little strategic value unless they are aligned with external opportunities and market conditions. Consequently, strategic management requires integrating internal capability assessment with external environmental analysis to formulate coherent and sustainable business strategies. The role of resources and capabilities in strategy. Resources and capabilities constitute the fundamental building blocks of organizational strategy. Resources refer to the tangible and intangible assets controlled by an organization, including financial capital, physical infrastructure, technology, intellectual property, human capital, information systems, organizational reputation, and brand equity. Capabilities, by contrast, represent the organization's ability to coordinate and utilize these resources effectively through organizational processes, knowledge, culture, and managerial expertise. While resources can often be acquired through investment or acquisition, capabilities are generally developed over time through organizational learning, experience, innovation, and knowledge accumulation. Consequently, capabilities are typically more difficult for competitors to imitate and therefore represent a more sustainable source of competitive advantage. Strategic success increasingly depends upon dynamic capabilities, which enable organizations to adapt resources rapidly in response to technological disruption, changing customer preferences, regulatory developments, and competitive uncertainty. Dynamic capabilities support organizational agility by integrating innovation, knowledge management, strategic flexibility, and continuous improvement into strategic decision-making. Appraising resources and capabilities. Systematic evaluation of organizational resources and capabilities enables management to determine whether existing competencies support future strategic objectives. Resource appraisal examines availability, quality, uniqueness, scalability, and contribution to organizational performance, while capability assessment evaluates the effectiveness with which these resources are coordinated and deployed. Effective appraisal considers whether organizational capabilities are valuable, rare, difficult to imitate, and supported by appropriate organizational systems and governance structures. Resources that satisfy these conditions have greater potential to generate sustainable competitive advantage and long-term economic value. Conversely, capability gaps may expose strategic weaknesses that require investment, restructuring, partnerships, or capability development initiatives. The increasing importance of digital transformation has expanded the scope of capability assessment to include data analytics, artificial intelligence, cybersecurity, digital platforms, innovation management, and organizational adaptability. Organizations capable of integrating technological capabilities with strategic objectives are generally better positioned to respond to environmental uncertainty and exploit emerging opportunities. Combining external and internal analysis. Strategic analysis becomes most valuable when external opportunities and threats are evaluated alongside internal strengths and weaknesses. External analysis identifies market conditions, industry trends, competitive pressures, and environmental uncertainty, while internal analysis assesses organizational readiness to respond effectively. Integrating these complementary perspectives enables organizations to formulate realistic strategies based on both market attractiveness and organizational capability. This integrated approach ensures that strategic decisions are neither excessively optimistic nor overly constrained by current limitations. Instead, leaders seek strategic alignment between environmental opportunities and internal competencies while recognizing areas requiring capability enhancement or strategic repositioning. SWOT analysis. SWOT analysis remains one of the most widely used strategic integration frameworks because it combines internal and external perspectives into a single analytical model. The framework categorizes organizational characteristics into strengths, weaknesses, opportunities, and threats. Strengths represent internal capabilities that provide competitive advantage, such as superior technology, financial resources, brand reputation, skilled employees, or efficient operations. Weaknesses identify internal limitations that constrain performance or strategic flexibility. Opportunities arise from favorable external developments including market growth, technological innovation, demographic changes, or regulatory reform, while threats reflect external risks such as competitive rivalry, economic uncertainty, disruptive technologies, or changing stakeholder expectations. The primary value of SWOT analysis lies not in listing factors but in identifying strategic relationships between internal capabilities and external conditions. Organizations seek to leverage strengths to exploit opportunities, strengthen weaknesses through capability development, protect against external threats, and minimize vulnerabilities that could undermine long-term performance. Gap analysis. Gap analysis evaluates the difference between current organizational performance and desired future strategic objectives. By comparing existing capabilities with future strategic requirements, organizations can identify capability deficiencies requiring investment or organizational transformation. Strategic gaps may emerge in technology, human capital, operational processes, financial resources, innovation capability, customer engagement, or organizational culture. Identifying these gaps enables management to prioritize strategic initiatives, allocate resources effectively, and establish realistic implementation plans that improve organizational readiness for future challenges. Gap analysis also supports performance management by providing measurable benchmarks against which strategic progress can be monitored over time, thereby strengthening organizational accountability and strategic discipline. Further leadership and management implications for internal analysis. Leadership plays a fundamental role in ensuring that internal analysis remains objective, evidence-based, and strategically relevant. Effective leaders encourage critical evaluation of organizational assumptions, challenge established practices, and promote honest assessment of strengths and weaknesses rather than relying on optimistic self-evaluation. Such objectivity reduces strategic bias and enhances decision quality. Contemporary leadership also emphasizes data-driven management supported by business intelligence, predictive analytics, and integrated performance measurement systems. Leaders must establish organizational cultures that value continuous learning, innovation, transparency, and evidence-based decision-making while ensuring that information systems generate reliable insights for strategic planning. For CPAs, internal analysis extends well beyond financial reporting. Finance professionals increasingly contribute through performance analytics, business intelligence, risk assessment, strategic forecasting, and integrated reporting that combines financial and non-financial indicators. Their analytical expertise enables organizations to translate internal information into actionable strategic insights that support sustainable value creation. Ultimately, integrating resource and capability analysis with external environmental assessment provides a comprehensive foundation for strategy formulation. Organizations that effectively align internal strengths with external opportunities while proactively addressing capability gaps are better positioned to achieve long-term competitive advantage, organizational resilience, and sustainable strategic success in an increasingly uncertain global business environment.